Hey guys, it's Sammy Warrior, the host of the Successful Millennials podcast. I appreciate you joining in and listening to another episode geared towards proactive and driven millennials born from 1990 to 1997. For those of you who are first-time listeners, welcome. This podcast is specifically geared towards those people born in 1990 to 1997 and are trying to find motivation as well as improve some tactics of how to achieve success in the 5 major categories. I invite you to listen into the journey as I do deep dives, as well as bring in some emerging experts to discuss these categories and our experiences and how to make progress with them. The reason I picked this specific age range is because I wanted to highlight the rise of social media and smartphones technology coming up in the formative years, rather than as an established adult. Myself being a millennial in that age range, I was in high school when social media really took off, as well as the iPhone, and that changed the way we grew up almost. Whereas generations who were born outside of that age range either was too young and was born into it, or they were already an adult and kind of fully developed. So what are these 5 categories? In no specific orders of importance, it's money, happiness, career/purpose, relationships, and that covers intimate, familial, and social, as well as health, and that's physical and mental health. Guys, I would love it if you can give me a review or DM me on Instagram at FinanceZilla or email me at financezilla@gmail.com. I would love to hear your feedback, as well as topics that you'd like to learn more on or things that I can do better. I am a big fan, as you probably have realized by listening to a few of these episodes, of continuous improvement. So anything that you guys would like to learn more on or things that I could do better on, please let me know. And if you could share it with just one friend who you think that one of these episodes can help them with, that would be greatly appreciated. Thank you guys so much. Now, let's get to the show. Hey, Jake, how you been, man?
Hey, doing well. Thank you for having me on the show.
Of course. We met at the FinTwit conference a couple months ago, and I'm really excited for this conversation. We've been talking about it since. And for those who don't know you or know a little bit about your journey, why don't you tell the audience a little bit about yourself?
Yeah, so I'm one of the founding team members at Trendspider. Trendspider is a technical analysis software, but it's really started to get into more of the market analysis side of things. So looking at seasonality, analyst estimates, insider trading. So not just technical analysis anymore. We've got a scanner, we've got all types of things other than that. On top of that, I've been, actively trading and dabbling in the markets for quite some time. I kind of started when I was about 12 years old and I was given a custodial account. My dad was the custodian on the account. You can't really trade when you're 12 unless you've got that type of account. That's kind of when I started and really got pretty active during the financial crisis. And when I went to college, I studied economics. So that really helped me put everything together and really understand why prices are moving and really has helped me create some different thought leadership styles with new market perspectives and that type of thing.
Awesome. So you were given the custodial account and then grew a love for the trading and the markets from a young age. Were you into math and into analytics beforehand? Did it grow just because you saw the power of trading and the power of what markets can be?
Yeah, I definitely wouldn't say I'm great at math or anything. I didn't do bad in math, but it wasn't something that, I couldn't wait to go to math class. But as far as analytics go, yeah, it definitely kind of sparked my interest in analyzing things. But I think I'd always been kind of over analytical, even as a young kid, with anxiety, just kind of being part of my genetics. When I first started, I was just basically analyzing trend using a line chart, higher highs, higher lows, not really knowing that that's what I was looking at, but just kind of visually seeing that that's kind of what I was always looking at. And when I was 12, I blew up that account. And it's funny because I blew it up mostly because I had a friend in high school. So I was actually doing pretty well in the account. And then I had a friend in high school who, when I was a freshman, we hadn't really talked much, in a year or two. And he's like, oh yeah, my dad's in this this stock happened to be a mega micro cap penny stock. And I'm like, oh, okay, well, I can buy like 100,000 shares because it's like 0.0001, cents.
Mm-hmm.
And so, yeah, I mean, that was pretty much why I blew that one. But the real kind of trading started when I got into the markets deeper in high school, sophomore, junior year during the financial crisis. And that's when I kind of had started to make some money from that. Trading some of my own money, but also just trading a family IRA account. And so that's something that I continue to trade today. And it's one of the probably 3 or 4 accounts that I just buy and sell, whether it's trading or longer term and that type of thing.
Yeah, a lot of people have this preconceived notion of traders that they have to have like 10 screens, 1,000 different charts, and they have to be like short keys and hot keys in order to do trading. But you have a more simplistic approach where you talk about seasonality, you talk about regular supply and demand. How have you been able to kind of change the narrative in your mind and make it simple so that I want to say anybody could be a trader, but it makes you not have to be an expert in math or analytics in order to be a successful and profitable trader?
Yeah, I would say, it's I like to keep it simple because it's so easy to have too many variables you're looking at. So if you've got 10 different variables you're looking at, or you've got 10 different screens, or even if you're trading 10 different stocks at one time, you've got a lot of outside forces kind of at work. If you're in a trade, right, that's doing well, and then all of a sudden your other 9 positions are doing horrible, you may bring that emotion into the trade that you're doing well and maybe not execute as well. So I like to keep it simple. I literally have one screen. I have a split screen because with Trendspider, just business stuff. But for trading, I don't have multiple screens or anything because I think it's just distracting. And I'm not really a day trader either. I'm generally like swing trading, position trading. I don't need to look at the chart every second. And that's one of those things for me, the more variables, the more false signals you can get. Maybe 4 things are saying yes, 6 things are saying no. And it's, the more simplistic approach, the better. I use the anchored volume weighted average price, the volume by price, basic trend lines, trend zones, and just price levels, horizontal price levels. And that's about it. And then with non-technicals, definitely seasonality is something I focus on, just not as an end all be all, but just kind of like a way to get an edge. So for example, IWM had a bull flag on the monthly chart going into November. Seasonally speaking, November is really strong for IWM over the last 13 or 14 years, pretty much since the financial crisis bottomed. That helped me have some conviction going into November with some of my trades. It's really about just finding something that works for your personality. Some people, may see those things and say, well, I don't understand supply and demand, so I'm not going to use the volume weighted average price or the volume by price. But for me, being pretty heavily supply and demand focused, those are what work for me. I don't really use a lot of moving averages. Sometimes I will, just to get a gauge of trend. Are we trending up? Are we trending down on the longer term or shorter term time frame? But generally, it's not something I add in my charts because they can just be a little kind of noisy.
Yeah, agreed. And once you explained to the Anchor VWAP was a game changer for me when I started using Trendspider a couple of months ago. But it was a new concept to me because not any tool has that. Only I think Trendspider does. And explain to people who are into trading or into looking at charts what that does and how it's kind of changed the way you look at things. Because normally EMAs are the way that people just see where there's potential support or resistance are.
Yeah, well, full disclosure, it's not something that's exclusive to Trendspider. Other platforms do have it, but the way that you can implement it and the way that you can kind of use it is unique to the platform. But it's essentially measuring the volume weighted average price. What's the kind of like the dollar cost average since a important event? So a reversal or the COVID low capitulation, because you want to know when the market reset. When did sellers become buyers? When did buyers become sellers? And that's kind of when that reset that I'm talking about, kind of the status quo is changed. Sometimes you can measure a volume weighted average price from an earnings, if there's a big earnings gap. That's kind of when the market has changed its sentiment on that stock, if you got a big move one way or the other. And that's something I learned from Brian Shannon, definitely a mentor to me. I won't sit here and say that, I found this out on my own. I was taught it by Brian and lucky to kind of have a pretty special relationship with him. He lives in Denver. So I get to see him pretty often. We golf drink beer, pretty often. So he taught me a lot of those types of ways to use it. And I use it literally on every chart that I post because it does bring in that supply and demand. It shows you, where are people break even, where, if the price is at $10 and the volume weighted average price from, the COVID low is at $12, that the average person, the average share that has been traded since the COVID low is holding at a loss if the stock's at 10 and the VWAP's at 12. So just gives you a gauge on, is the average person profitable or not?
Agreed. Yeah, because I know a lot of the times when you're holding a loss for months, eventually when it comes back to that price that you're originally holding at, you sell at a minimal loss or break even. Where if you had an idea of where the volume shelf is, does it have room to grow more or not? And that was one of the big things that has helped me. I know that you were sharing in the conference and even in the Trendspider tool. But what other things do you look at? I know the raindrop chart is a big one that is Trendspider proprietary software. So I think that one, if you can explain a little bit about how to use it, would be helpful to the audience.
Yeah, definitely. That one is unique to Trendspider. So that's something proprietary, and it's a volume weighted chart. So it allows you to see the volume profile within a candle. So a lot of people, if they're looking at maybe the daily range for specific stock, if they want to look and see where volume came in during the day, you generally need to go to a lower time frame, maybe a 1 minute or a 2 minute chart to see where those volume blocks came in. And that's inefficient. The whole point of Trendspider is to make every part of analysis in the market more efficient. So the raindrop kind of optimizes that whole experience by showing the volume profile on the candle. So instead of looking at an open and a close, kind of the first layer of the candle, you've got the volume weighted average price on the left. So if anyone's familiar with a typical bar chart, the left bar is your open, the right bar is your close. So you're using actually a bar chart, but instead of that left bar being open and the right bar being closed, the volume weighted average price for the first half of the time frame you're on is your left bar. Then the volume weighted average price during the second half of the time frame you're looking at is the right bar. So if the VWAP is higher than if the VWAP on the right side is higher than the left, it's going to be green, just like a regular bar. During the right-hand side is lower than the left-hand side. Pretty much the VWAP during the second half of the period is lower than the first. It will be red. So they're really helpful in understanding, where is volume being absorbed in the market? Because I don't really believe there's such thing as buying volume and selling volume. Because for every share of volume traded, you have to have a buyer and a seller. So it's really hard to say there's buying volume, selling volume. It's really where conviction is by buyers to absorb that supply. If somebody's dumping if there's an institution dumping 1 million shares on the market, but there's somebody on the other side willing to absorb those shares, then you've got volume aggregating at that price. But a lot of the time, if you've got a institution dumping shares, 1 million shares on the open market, and there's no buyers there to absorb those shares, that supply, the price has to drop. So the raindrop will show you where that volume is aggregating, and it will show you kind of as a function of buying conviction rather than buying volume or selling volume.
Agreed. Yeah, because you're able to see, especially where momentum is building, because it splits the candle in half, especially on a daily chart. You could kind of use that to get in a day earlier. At least that's what I try to do using the VWAP inside the candle and the raindrop. So I think it's awesome. But people have there's so many different theories of what technical indicators to use. People who are more fundamental analyzers, and the market itself is very psychological. It's because it's how humans behave during these emotional impulses. How do you keep discipline? Because this podcast really focuses on the discipline needed to be successful. And as a trader, you need to be very disciplined, I'm sure, as you're aware. How do you keep discipline when you either have a bad week or a bad month, or you don't stick to your trading plan? How do you keep yourself in check to continue to stay profitable years in?
Yeah, sometimes I'll just literally take a break because, if you have a bad week, or for me, unless I'm actively trading for the week, I generally kind of base my performance per month. Did I do well for the month? Because sometimes my trades are multi-month trades because I'm looking at the monthly candle. So for me, any chart that I look at, I'm already getting a sense of how low can this go, before I'm comfortable adding or just kind of taking a loss. So having a plan before you get into a trade is always important. I'm not somebody that like puts in my stop loss on the book, before I even buy it. I don't really put stops on the book because I don't, I think that's just like pretty much asking to be stopped out. But I do use mental stops. I have a general idea of, where the trade's probably going to invalidate. And most of the time, I need to see the monthly candle close. So like if something starts breaking down a little bit and on the daily or the weekly, I still want to look at the monthly. If the monthly looks okay and the monthly is still within the thesis, then I'll probably hold. And it probably won't, get too heavy because there's a potential for it to break down, but I probably will let it play out. There's been too many times in kind of my trading experiences where I stop out just because I get emotionally kind of like too involved. And a lot of the time that was because I got in too heavy, or the options that I was in, they were too close or too far out, too close to expiration or too far out of the money. And it didn't allow me to stick to a plan. So my thing, at least with trading options, is I always, if I think something's going to hit $20 by X date and it's trading at $15, if I think it's going to hit $20 in a month, I'm probably going to buy $20 strikes for like 2 or 3 months out, because I like to give myself time. I'm not here to, try to be, the next Rain Man of the markets. If I'm wrong, I'm happy to say I'm wrong. But you can be wrong and still be right over the course of the trade. So you have to give yourself time. And, some of these people that will trade options, they're like, well, I can only afford the one that's 20% out of the money. It's like, well, then don't buy it, go buy, if you want to trade options, and go trade something with a lower price. So you're not having to take that risk, because that's the only premium you can afford. So I generally trade more common stock, pretty heavy common stock positions with high conviction. There are some times where I'd rather play the option, just because, if I think there's going to be a really strong move relatively soon, then, if I think it's going to move 10%, I'd rather use less capital and leverage that move with options rather than just common stock. So, and it all depends, right? Like, people will show these 500% gainers on a stock, right? So like, let's say you have a $10,000 position you want to get into, and you have a 10% stop loss. You have essentially $1,000 you're willing to lose. Or you buy $1,000 worth of an options contract, knowing that you're willing to risk that. And then you're using less capital, and you still have your risk defined. So the thing is like, you'll see somebody post, well, I made 500% on this. Well, if that 500% was 0.5% of your account, or you make, 5% on a larger trade, it's the same trade, right? Like, it's $500, $500. Like, it doesn't matter, like, if you made 10% on a trade or 500% on trade. So I just think there's something that to be said about, a lot of people on FinTwit sometimes will show, it looks like, oh, I'm making 500%. Yeah. They won't tell you that it's a $50 position, so it just, as long as you have conviction, that's how you should kind of decide what my position size is and what my risk versus reward is. And a lot of people think you have to have a lot of money to start trading. You just have to have discipline. And I've seen many people take $500 to tens of thousands because they're just good at managing risk. They know when to take their loss. They know when to hold. And that's the thing a lot of people don't realize too. Sometimes you just got to let your winners run. And
that's the hardest part for me.
Yeah. I mean, if you just let your winners run, you can really, if you know when to take your loss quick, but you let your winners run, you can really do some good stuff in the market. But that is hard because, it's hard not to, the whole point of the market is, well, don't be greedy. And then technically, if you're holding and letting it ride, some people would call that being greedy, but there's different ways to measure, like, has it broke the trend? I generally look at a previous week's low or high, is it breaking above that previous low or high is kind of my threshold a lot of the time.
Now a quick word for today's show sponsor. I'm normally not a fan of nice clothes. I like comfort over style, especially because I like being active often. Habits 365 is a brand that does both. The reason I'm excited to partner with them is because their vision is in line with this podcast. Their whole message is to preach consistent improvement by creating and maintaining continuous habits 365 days a year. That sounds exactly like what I like to preach. 1% better every day. It also helps that they promote positivity around important topics like mental health and wellness, which is one of the 5 categories, as well as social justice and much more. The fact that they employ mostly millennials and are run by 2 people who are in their 20s, like myself, is an added bonus. If you're interested in supporting the show as well as getting some apparel, feel free to enjoy the code FINANCEZILLA for 15% off online purchases by using the link in the show notes. That's FINANCEZILLA for 15% off online purchases. Guys, water is super important for maintaining physical health, one of the 5 categories of the Successful Millennials podcast. Doctors always recommend at least 8 cups a day, and for every cup of coffee or tea, you should probably add another cup of water. Throw in things like pre-workout, creatine, and the fact that everybody just has different hydration needs based on, their body weight and gender, physical activity, etc. You should probably drink well over that eight cups of water. Me personally, I drink like a gallon and a half a day. I just love water. I drink it with every meal. I drink it when I work out. I don't drink juices or anything else. That's why I'm excited to partner with the Coldest Water. They make water bottles that can preserve cold water and ice that won't even melt for 36 plus hours. Especially in the summertime heat like now, these bottles that come in different sizes are a great way to keep your water cold when running errands, hiking, or just so that you don't have to keep going to the fridge every now and then. Enjoy a personal code for 10% off our online purchases by going to the link in the bio and using the code FINANCEZILLA. That's FINANCEZILLA for 10% off online purchases. Now back to the show.
Okay. Yeah, I'll have to keep that in mind because, I played Upstart, for example, a recent stock that was really good, but I could have made better if I had just let it run for a while. And there's always going to be examples like that. But that's what humbles you in the market for sure. It keeps you always trying to learn more. But for that piece that you said about conviction, right? For me, options, I found I don't have the emotional ability to stay in on an option because the swings are too volatile, even if the price doesn't change due to IV and all the other stuff. So for me, I'm like you. I just mostly common stock, common shares. I feel like I can hold that more. I can stay to my plan better. How did you find what you're best at, and how would you recommend somebody to build discipline in a certain area, wherever it may be, whether it be options trading, whether it be penny stocks or, just regular common shares? How do you get better at knowing yourself?
Experience. I would say, you could read every single book in the market, but that book is not going to teach you how you respond when you're down 10% on a trade in 2 days or, or down 20% in your account. That's something that you have to learn about yourself. And a lot of people don't realize that, that's mostly what trading is psychological. It's not, how good am I at recognizing a MACD cross or something? It's how good am I at recognizing not to go a full position when the MACD crosses. Maybe you scale in 1/4 of the position and you add on maybe a retest if it's a support resistance slip. So for me, I need to see a lot of things align to get an edge. So that keeps me disciplined. Generally I want to see a strong weekly candle. I want to see a strong monthly candle. So like GE, that was a recent trade I took and it kept, I had drawn down probably, I think 25% on the trade. And with options, that can be a lot more common than most people think. The problem with options is a lot of people have these tight stops, but sometimes tight stops on an options trade is not the way to go because you can really just get stopped out and immediately turn. So having conviction and knowing, okay, well, this is a setup I've seen a lot of times, and you're only going to be able to tell yourself that when you've seen that a lot of times, like from experience, So I generally actually find a lot of my setups on a line chart because that's how I started. That's kind of how I trained my eye to look for trend. And so I'll just go on my iPhone and just scroll through the stock app. I probably got like 100 plus stocks that I watched every day. I just scroll through and I see, okay, well, this thing was, down 5%. Now it's up 8% today. Maybe it's reversing here. But a lot of the time the line chart will just tell me the overall trend. And so I'll look at the line chart and say, okay, well, this is looking good. Then I'll go into the actual technicals, the candles, okay, is the MACD crossing? I don't use a ton of lower indicators unless a trend is overextended to the upside or the downside. So I'll use the Williams percent range which is kind of like a highly sensitive RSI essentially. Mm-hmm. And it allows you to see divergence a lot quicker than most indicators like the RSI. So that's something that I just found from experience. I probably tested that thing years to see, okay, this divergence, and it depends on the stock, right? If it's a really volatile stock, sometimes you won't have as much conviction. But if it's like a bigger name, and that's why I like options, because you can essentially trade these larger cap names as like more of a smaller price stock, because the option, is a lot cheaper rather than having to go buy a ton of Apple. You can put in maybe 1/10 of what you'd put in a common stock position and make the same amount of money just from, having conviction on the options trades. Like I said, I generally trade common, but I do have instances where it's just like, okay, everything's aligned. The option makes more sense, and it has to be liquid, right? Like I don't want to be trading something that's got 500 contracts outstanding and 10 contracts of volume. It needs to have a lot of volume or a lot of outstanding or open interest, which is essentially outstanding shares of options. So I guess long story short, experience. You can go watch as many videos, read as many books, but until you experience it and know how you're going to respond based on your personality, you're kind of at a disadvantage.
Yeah, market tuition, as they say, is the best teacher. I mean, you're going to learn how to handle your emotions a lot more when you handle an actual account. That's why for me, I never did paper trading, because like the hardest part is your emotions. And if it's fake money, then I feel zero emotion of throwing $1 million in something. Like it's a joke to me.
Yeah.
But
yeah, exactly.
I could say it helps you with the back testing. So tell me how you started from, you started trading, you figured out that you like it, and then you feel something was missing in terms of technical analysis, in terms of whatever Trendspider does now with the market scanner, which I really like, and the back testing strategy. How did you come together to decide that we want to make something new versus just doing it on offhand like a lot of people do, or draw their own charts?
A lot of the things that we've created on Trendspider are things that I've always done manually. So like, for example, the volume by price, I would go and look at all the volume bars on the x-axis and like compare those to where the price lined up. And it was just really inefficient. So a lot of these things were just manual things that I had done, and I wanted to make it easier to do. And some of that was inspired by mentors. Some of it was inspired by just me doing it and saying this takes way too long. But yeah, I had always wanted to get in on sharing, my perspectives on the market through a software rather than just, having a Discord room or something and all of that. I really want to help change the perspective and the way people look at the markets. And so it's really a team effort. We've got a lot of different people on the team that all have different ideas, and a lot of customer interaction gives us an idea of what the market really wants. So it's a lot of what we think is what the market may like, but it's also, what the market demands. And if there's 50 people asking for a feature or an indicator, then it's like, okay, well, we should probably add this. There's a lot of people that want to see it. So some of it's stuff that's kind of table stakes across other platforms. Some of it's, very new ways of using an indicator that's always been around. So just really listening to our customers, but also kind of taking what we've experienced and trying to make those processes more optimized that weren't incredibly efficient.
Agreed. Yeah. So on that note, like, is there anything new on the horizon coming for Trendspider that we should be aware of?
Yeah. There's all types of stuff. The end goal for Trendspider is to really have a brokerage connection. So right now it's just a analysis platform, and alert system. So, you can create your own alerts on different indicators. And when those alerts go off, you would then have to go to your broker. So the end goal is to have some type of API connected to the platform. So if you're using TD Ameritrade, you just kind of plug into TD's data and, you set your alert. Maybe you predefine the trade, buy 200 shares at the anchored VWAP. And so then when the alert goes off, you say, perfect. Okay, press buy or execute this order that I predefined. But that's kind of further down the road. A lot of things that we're really working on now are just kind of, making some of the features that we already have more robust and efficient, and kind of adding some new features that really kind of broaden that market analysis perspective. And some of that is technical, some of it's non-technical. It's one of those things that we try to get out a relatively decent update every couple months that's got something really new where, intra-month updates are more kind of bug fixes and that type of thing. But the mobile app is something that we're really working on now. We already have one, but just continuing to update that and get it to a full, pretty much functioning app. Right now, it's more of a companion app. Right. So you don't have all the full functionality that you do on the desktop platform, but that's something the dev team's working on a lot, is getting that mobile app a lot more functional.
Yeah, no, for sure. If like we could do alerts from your phone and create new charts, that'd be awesome. But it'll get there, I'm sure. Selfishly, like if the chart patterns too would be awesome, like a scanner for that versus candlestick only. But I figured out a way to do the rolling cup and handle via like just a bunch of scripts. But it's awesome the way that you can just ad hoc a script there. For those who are interested in scanners, I think I was using FinViz and a bunch of other random stuff, and I had to pull everything. I was like using Webull and then FinViz and then my brokerage. So to have everything in one spot, it's like you said, the simplicity of only having one screen makes decision making a lot easier. It gives you that sort of clarity.
Yep.
So the classic question I like to ask people who are like ourselves are both traders, time in the market versus timing the market is always a controversial discussion. I mean, a lot of people view that time in the market is way better. And I think for a percentage of people, maybe a vast percentage of people, that's a true statement. I myself hold long-term for a while in like probably 50% of my stocks. And then the other 50, I kind of more actively trade in a swing trading format, just like yourself. I'm not a day trader. I don't have the emotions for that. But how would you kind of say, what would you respond to that? And obviously, congrats to you as being a recognized trader and Benzinga Pro. So that was pretty cool too, I'm sure.
Hey, thank you. Yeah, I mean, I think for me, I kind of am building more of a longer term account for my son who was just born. So like for him, definitely time in the market. Like I don't care if you go look at Amazon, you go look at some of these companies back in the 90s, they drew down 50, 60, 70%. And, over time, they continued to move up. So it's really about finding something that you believe in, that you see other people using. And if it's got a sound kind of business model, then, time in the market, 5-10 years generally plays out pretty well. And so I've seen times where, if I would have just held something instead of trying to trade around it, I would have made a ton more money. So I think it really just depends what industry it is. Is it a stock that, is heavily diluted? You definitely don't want to be in a stock that's just constantly getting public offerings done, because that's never going to help the share price over the longer term. But unless it's helping really grow, like UPST had an offering, I think after their earnings, when they popped to like 150 or something, stock went back down like 106 because of the offering. And then it's, ripped all the way to 400. So there are times where these offerings make sense if it's really gauged towards growth, but a lot of these companies will just constantly dilute. And that's just generally not great for the long term, unless it's really, really focused on just exacerbating that growth. But yeah, I think it's both. I mean, a lot of people, and myself included, will sometimes just trade around a core position. Maybe you want to hold 1,000 shares of stock Y, but maybe trade 2,000, maybe at one point have 2,000 shares and you just trade around that 1,000 shares. I think it's a mix, but definitely for me, it's definitely something I've seen over the long term. A lot of stocks have appreciated pretty well that have a good business model behind them. But I think it depends. Some people could probably make more money if they're really, really good traders, beat the market by just trading. But some people are just better off buying and holding. And, you don't see Warren Buffett day trading or swing trading. He's just finding companies that are undervalued and have a good business model and holding for decades.
Yeah. It's definitely, you're not going to lose over time doing that. It's just, will you earn fast enough, as I think is the patience problem that a lot of people have. But I want to talk about all-time highs a little bit. I know everybody in the market thinks we're at an all-time high, and obviously we're doing really well. But when you're trading a specific stock, I know you said you look at the previous week to see if we're continuing the trend or not. Let's take Tesla the past couple of weeks, or Upstart when it was going up to 400. Every week it was setting an all-time high. How do you react? Because you don't really know. For me, at least, I was struggling to understand when's a good time to exit if it's continuously setting an all-time high and you don't have enough market data to know what's going to happen with that specific stock.
Mm-hmm. So yeah, a lot of people say when doing technical analysis, look to the left. Mm-hmm. So, if there's no price action to the left, i.e. the stock's hitting new highs, I'm generally using fibs, so just fib extensions, and that's something I learned from some people that I talked with in the market and have worked with from Trendspider. JC Peretz, Tarek Saab, who's not incredibly active on Twitter but really into fibs, and that's kind of how I learned to use Fibonacci extensions. I don't use Fibonacci inside levels, so like the measured move, I'm not looking at the point, 618 inside levels. I'm only looking at extensions, because if I'm looking at a measured move, I can just look at the pivots within that move for my targets. I'm not really using fibs. But for like something that doesn't have anything to the left and hitting highs, like Tesla, like my targets were pretty much hit right on the money because they were just fibs. I didn't do anything great. I just did the measured move and looked at the Fibonacci levels. And the thing is, they become self-fulfilling because a lot of institutions use these levels as kind of their levels above to take profit or maybe short or whatever the case is. So yeah, 0.618 extensions are the way I kind of get an idea of, okay, maybe we're going to stall out here or pull back. And that's actually what happened in SPY a week and a half ago. We hit the 1.618 extension from the fall sell-off measured move, touched 471 almost on the dot, pulled back, and then we're pretty much right back there now. So those are definitely how I like to gauge levels if there isn't any price action to your left.
Nice. I'll definitely need to add that one to my list, because I've never really been a fan of Fibonacci in the middle and those lower levels. But for extensions, I might need to get into that, because it's a wild time in the markets today.
It's only if there's no price action. Like if there's price action to the left, I'm going to use a previous pivot. Like I'm not going to use a 1.618 extension. But if there's literally clear skies above and there's nothing above, then the 1.618 extension is something that's really helped me come up with targets, since you don't have any pivots or anything to look at to the left.
Nice. So for those people who want to learn more about Trendspider and learn about how you analyze charts on your YouTube channel or Twitter, tell everybody else where they can find you.
Yeah, so I'm very active on Twitter. My Twitter handle is Trendspider_J. Watch out for scammers, because there's a lot of them trying to pretend to be me, and they come up with all creative ways to make it look like @TrendspiderJ, but it's just @Trendspider_J is me. If there's any type of difference in that spelling or anything, it's spider with an I, it's not Y, or all types of weird things. And then @Trendspider is the company account, which we also post a ton of stuff. And a lot of our goal is to educate as well. So we post a ton of educational content. We've got a YouTube channel that we post a ton of our live streams, weekend updates on. Just Trendspider is the YouTube channel. And we also have like Trendspider University. So if somebody signs up and they're like, I have no idea how to use this, this is really overwhelming, you can check that out. Once you check that out, you get a sense for things. You can always do a one-on-one demo as well with one of our customer success team members as well. So we try to make it as easy as possible to get comfortable with the system, rather than a lot of these platforms, you can't even reach out to somebody. You'll get a generic canned response email that doesn't even have a person that's really responding. So that's something that's really different with Trendspider, is we have a customer success team that's going to answer any email that comes in. If you send us a DM on Trendspider's Twitter, they're open, we're going to respond. So that's something that's really unique. So Twitter @Trendspider is the company account, @Trendspider_J is my account. And then on Instagram, it's just @Trendspider, YouTube @Trendspider. And those are some of the main channels that we focus on providing content and different educational type of resources.
Nice. I'll definitely have all the links there, because I'll have a direct link just in case scammers try to get you. But Jake, I appreciate this time. I know you're a busy man, and I learned a lot definitely on the fib extension and some other things that I need to add to my trading strategies for sure. And hopefully we continue to connect and follow your journey, man.
Yeah, well, thank you for being a supporter of the platform. And I know this is going to be kind of a timeless interview, but for the next week or so, we do have the Black Friday sale. We have a 7-day free trial, so you can try it before you buy, and that's about 60% off. I'll send you a link where they can check it out. But for those that see this after that, we are always having sales throughout the year. If it is a little expensive, just wait for a sale, and you'll be able to get a good value for what you're going to get.
Yeah, and definitely during the 7-day trial, you could talk to the customer service team. That's what I did. I mean, I had a bunch of questions after FinTwit, and they built the scanner with me because I was like, "This is what I want," and they helped me out, and I was like, "All right, perfect." Since then, it's been a game changer for me. I've been taking it on the road, traveling and trading. So, yeah, I mean, I can't say it enough. Trendspider has been awesome. So I'm glad you guys continue to make updates to it and make it better and better.
Yeah. Well, thank you for having me, and looking forward to doing another one of these soon.
Of course, anytime.
That concludes another episode of the Successful Millennials podcast. I'd love to hear your thoughts on this episode and which tip or trick you picked up on that you'll implement after listening to today's episode. Please don't forget to leave a like or subscribe on whichever podcast streaming platform you're listening to right now. Obviously, we're on all of them. And let me know what topics you'd like to learn more on or ask a guest on. And my email is going to be in the show notes. It's financezilla@gmail.com. That's the best way to reach out to me. If you have Instagram and you prefer to reach out there, I'm also quite active and I'll respond to DMs. It is at financezilla. Again, both of those will be in the show notes. Now, if you're wondering on how I got to where I'm at, where I was able to retire from corporate and kind of do this as well as invest and trade in the stock market, and you would like to learn more, kind of take control of your finances and therefore take control of your life and being able to do what you want to do, being financially independent, reach out to me via either of those ways and ask for that 30-minute free strategy consultation session. The link again will be in the show notes for that, and we can talk about how to live the life you want to live and make money doing it, as well as be comfortable and happy. That's, I think, the goal of everything. That's the reason why I started this podcast and why I do this consulting business. So reach out, let me know if I can help, and apply via the link in the show notes. Until then, talk to you guys next week.